Hello and welcome to a new episode of FundEd360 English channel. I am Professor Anup Matthew and today we are going to discuss about the direction of Indian stock markets. Is it still safe to invest in Indian stock markets? Is it overvalued? Will it scale new highs? Keep watching. Before we check the prospects of Indian stock markets, we have to keep a few things in mind. In the past 3 years, the number of DEMAT account has been increased to 3 times. And the mutual fund investments, the fund inflow to mutual funds has been multiplied by many times. That is, the herd mentality is positive with a fear at bottom. The discussion is purely based on the investor's perspective because when it comes to a trader, they need not bother much about the long-term prospects of any market. They need to bother just about the daily volatility of the market. Need not bother about anything else. We know that recently almost all the countries, their inflation rates are going up, the crude prices are going up, and obviously when concerned to Indian markets, the overall price earnings of India itself is on the higher side. These are the main factors that pose cautious towards Indian economy as well as Indian markets. But when we analyze as a whole, not just the micro or macroeconomic figures, as a whole, as a system, Indian market, we can very well understand that the Indian markets has a very high potential to scale new highs. I don't want to say any figures like some of the brokerage houses, they told that within 3 to 4 years, Sensex may reach 2 lakh. No, I don't want to tell anything like that. But the overall sentiments of India's growth story is very much optimistic in nature, irrespective of the inflation figures or any other external macro economic parameters. We should keep it in mind that when development outrun the capital expenditure, normally everywhere in a dynamic economy, everywhere the inflation data shows that the value is on the higher side. When it comes to the PE, traditionally Indian markets PE is always on the higher side, but still Indian market could be able to scale new highs. That's the history. So we need not bother much about the Indian market's PE also. Obviously, I do admit that the valuation is on the higher side, but still it can pump up to new highs. I will tell you why I bet on India's economy, Indian market on a long-term perspective. The first and foremost reason is the larger proportion of young Indian population. What does it mean? They are not at all reluctant to think beyond conventional investment options like real estate or fixed deposits. The larger younger generation population as well as the rapid urbanization of India, both should be read together. Accessibility for higher education, accessibility as well as the migration of younger generation from rural or suburbs to bigger cities, and they are finding jobs over there. They are being exposed to new age investment strategies and options. This is the one good reason why I bet on Indian markets. We could able to find that a lot of younger people, they are fascinated about cryptocurrencies and they have invested a lot of money on that. That means they are not at all reluctant to take risk. When compared to cryptocurrency, the risk associated with capital markets are far less. So especially when cryptocurrency is on the back foot and the regulators regulates that at its best, that money obviously come to the stock markets. And the word of mouth by the younger generation people, when they return to their hometown, which they are in the rural area, there also a revolution as well as a know-how about the capital markets in that region. That means more and more number of people will come to direct stock market investments in near future. That's the reason number one. Second reason is the better corporate earnings. I don't want to guarantee that this will happen forever. But we should understand one thing, that nowadays, because of larger data analytics options, companies are very much adaptive towards the changes. So a drop in earnings could be very well offsetted by their strategy in future also. The third reason is the company as well as people, they have better international exposure. Because of that, Indian companies explore their markets globally. I'm talking about the companies who are taking business seriously, and that give better leverage on these companies to get into international markets, especially unexplored markets like Africa and South America. The fourth reason is nothing but the lackluster performance of real estate assets. In the last decade or even before that, a youngster's aim was to invest in real estates. Once he get a job, he go to a bank and get a housing loan and pay the loans for the next 20 to 25 years. But because of the urbanization as well as the exposure towards the better financial management knacks, they think something different. That means they think something for the future, or they plan for an early retirement by investing this much amount in an asset class which can grow rapidly, so that he can achieve his targets, financial goals, maybe in the age of 40 or 45 years. Because of this herd mentality, the investments towards the real estate came to a dip. And in future also, this follows. That's what we can predict. So be confident, stay in the market, invest wisely and discretionally. See you in the next video. Signing off, Anup Matthew.